Tesla, wait, did I trade Tesla? I don't remember that I traded Tesla yesterday. I think it was not Tesla GG. Maybe it was Apple, JKS, NIO, MU. Those are the stocks I traded yesterday. X and non, that's still good. Tesla long. Did I trade it? Maybe I traded. Okay, yes. Maybe I traded it. Oh, it was later on the day. It was after I did the recap, right? Or before it. Anyway, yeah. I remember it now. I just took a lot of trades yesterday that I forgot what I've taken and what I didn't. Surprised when members remember my trades more than I do. But that's good still. I'll break down this trade later. I actually want to add one more time on it. If it makes a higher low, I'll add on to it and I'll partial closer to the high of the day. If I don't get to add, I'll just hold on to 29.80. So okay, let's start here. Avi, let's see what you did right there. You traded, what stock is this? Let's try to guess by the price. It's new. Yeah, I remember this price action. So open range breakdown to the short stopped out, open range breakout to the long and got stopped out. Now look at this. This is actually a common mistake. You got stopped out 2 times within a range, right? First time the stock was dropping down, and I could say that it is within a range because even in the pre-market it's still within a range. This is the range in my opinion, not this candle because it's still holding this range right here, right? So this is the range right there. It did a huge red candle, definitely good. You're taking it for an open range breakdown, but you are taking it for an open range breakdown when it's simply stuck within the range. And what do we do when we take a position within the range? We put our stop loss at the high of the range. If we break, you could add to your position and move your stop loss to the middle of the range. Why is that? Because if the stock gets back into the middle of the range, it is just simply not that weak. I honestly held my short all the way up there and I get stopped out. But yeah, I also broke my rule there and I'll share that with you. So if the stock just comes back within the range it's not that weak and you could actually be interested in a play to the other position. Then you are taking it to the long side for an open range breakout still within the range, right? And I wouldn't have taken it to the long side unless it just broke this area. This here is good. This looks like parabolic drop rate for me, but unfortunately I think this is the second candle, 5-minute candle, or which wasn't that big. So yeah, I would have avoided taking it there. This right here, if I'm not wrong, it's support from yesterday, right? You had a level there. Now you're taking it to the long side on a new high, and this is a strong stock. And by the way, I'll tell you why I like this to the long side, but still I didn't do that. If you look at the daily chart, remember how we said the candles are behaving? It's not making higher highs and higher lows, higher highs and higher lows, simply like that. This candle yesterday, it closed like this. Today we're opening up there. It could definitely just shoot back up, but that's not the way candles immediately or usually trade, right? They should go back down a little bit, squeeze back up, and then continue going higher. So yeah, if I take this into the short side, it's only scalp. If I take it to the long side, it is a trend. This drop right here is what I wanted to trade or to get. This short right here, just to get that wick to the bottom side. Definitely not for a full red engulfing candle. And if it did that, it would not have been bad, right? Now that it's squeezing back up and it's making a new daily high, this was definitely a good entry to the long side. You see how we trade those daily candles similar to how we trade the 1-minute candles and the 5-minute candles? This is the candle. This is it today. It's selling off, coming back up. It's making a new daily high along with it, breaking right there. You see? That's it. Right there. This is today's high. So yeah, this was an amazing entry there to the long side. Now let's get back to Avi's trade. My epic pen froze, so I'll open it one more time. Pen. And let's get back to Avi's trade right there. Hello, Snari. How are you doing? Alright, now let's see right there. So you're taking it to the long side. A lot of partials, unfortunately, right? Be careful, or maybe something to work on. This would have been a good first partial right there if you're afraid of swing highs and swing lows. Daily level, view up. Ads on the way up, this is what I would have avoided, to be honest. And you see how those ads right here got you soaked out because your average increased a lot. You had a really good entry at the beginning. We don't add on the way up, we try to add on the pullbacks. Why is that? So that we can recognize where the new support is or what is the level from which the stock will bounce. Now you're adding here and here and here. Let's just assume that the stock is bouncing of the 200, coming back down. It will get you stopped out because of all those ads, and then it will continue going higher without you. You need to wait for a pullback before continuation. Just don't be scared that it will go without you. It will never just go $2 or $3 straight up from below view up all the way to view up and above it. So it will do a pullback at one moment or another, and it did 3 good pullbacks today, or 4 good pullbacks, which were good places to add. Overall, really good trade right there, and well managed. Unfortunately, it got stopped out before the real move by a penny there. Yeah. Now let's see what else we have there. GG, let's see what you did. So GG traded Tesla. Now, one thing which is scary right here, actually not one, even more a little bit, right? Can you tell me? 2 things, like 2 main things I wouldn't like about this chart. There are a lot of stuff, but 2 really obvious things. Come on, think of it. Okay, 200 MA and the wick, right? This wick wasn't there, but this wick was there, right? So you're having a strong support, resistance. Exactly, yes, AG. So you're having a stock which is opening all the way up literally to the 200 moving average, bouncing out of it and closing with a bigger upper wick. This right here is scary, this right here is scary, and I wouldn't take this thing to the long side unless this is my target, and I'm really glad that this was your target right there. Now you are taking it to the long side. What's the issue here? Your stop loss. It's so tight. What is the range around here? You could draw 2 ranges. From here to here, this is the range. Now that it's chopping around here, you're having a new range, right? What is the new range? This is the low of the range, this is the high of the range. If you are trading within the range, remember this rule, guys. This rule, we're going over it like almost in every trade review, right? And you see it's enough good. It will save you from a lot of chops. It will decrease your risk to reward, yes, but it will save you from a lot of losses. Within the range, put your stop loss at the low of the range. Getting in there, stop loss down here, you'll survive the pullback, you'll partial right there, you'll get stopped out at break even. The candle was scary on the 1 minute chart. I know that it made a new 1 minute low. It is scary, but the 1 minute chart is nothing, right? Especially when the stock is just choppy. The reverse hammer within the range doesn't mean anything. The reverse hammer at the high of the day definitely means something. The hammer at the low of the day definitely means something. But hammers and reverse hammers within the range, they mean nothing, right? So you try to take it to the long side. I would have personally avoid this long right there. Get stopped out, no reason to get stopped out, re-entered, add it to your position, partialed, and exit at break even. I actually see a wedge around here, or a pennant. That's it, a pennant right there. It's breaking the pennant, which was not a bad entry. This right here was a decent entry to the long side. And after breakouts on pennants, they either retest and continue. So a new 1 minute high wouldn't have been a bad entry. It didn't do that. Or if it breaks the pennant and gets into the range, it's not a good long anymore. And it actually might be interesting to watch this thing right there for a short. Okay, other thing now. So you added, right? The ads, remember we add breakouts or after bounces. So if the stock is trending, your ads will be here, 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 right? If the stock is doing this, you can't add here and here and here and maybe here, right? This is the consolidation area, this is the range, this is the high of the range, this is the low of the range. You're getting one entry. The moment it breaks out, you add to your entry, move your stop loss to the half of the range, and then you add there and there and there. Does that make sense? We can't just add because it's going in our favor within 1 minute candle. But yeah, good job. Happy you could manage it and exit. Unfortunately, the loss was big because of the RSC. 1.8 R loss. Perfect. Ivan, let's see what you did. SCHW. Traded decent to long. Now this is decent. In my opinion, this is totally decent. Unfortunately, it just didn't work out as good as you wanted it to work out, right? Now look at this. First of all, you are getting in at the breakout. Is this breakout a bad setup or no? Anyone, what do you think? There will be multiple opinions right there. So let's see what you guys think. Not bad or good, but what do you think about this right here? Why would you have taken it and why wouldn't you have taken it? A little extended, pushed back. Yeah, it's just a little extended, right? A little extended, but it's not bad. Right at the resistance, it actually broke the resistance. This is what I love about this trade. He took it at the breakout. 2 pings of high of day and a breakout. Okay, good job, excellent. That's also as well. 1 touch, second touch. This is the third touch for a breakout, and you have higher lows, which is good. I don't like the ATR of these candles into day high move. Amen. Yeah, I'll definitely take a look at them, Ivan, and good volume. Okay, so look at this. First of all, I like this type of breakouts. Remember what we said? Look at this. If this here wasn't there, let's assume this wave is not there, and it immediately just goes from the bottom all the way to the high of the day, breaking the high of the day, and then Ivan takes to the long side, this will be bad because this right here is a huge move. This right here is definitely a huge move, and you don't want to see, you can't really hope that it will go up, break it, and then continue going higher. It will definitely do a pullback. However, here, what I like about it is that it did go to the high of the day. Those people who took it to the long side at the support, they're definitely taking partials just in case it's going to do a double top. That double top failed. It did a higher low wave. A higher low is something good to see, right? And then it's breaking out where Ivan took it to the long side and then partial. So first trade, ascending triangle, tight stop at a new 1 minute low. Not bad. New 1 minute low, tight stop loss. In this case, I would have it at least here, half of the last wave. Okay, I wouldn't have used the 1 minute low. Why is that? Because this move, it was small, but it wasn't as enough small to have your stop loss at a new 1 minute low. Let's say this is the price action here, okay? Oh my god, it will take time to draw this. It will take time to draw this. But it will be worth it. And I wish I used Word document to draw this so that I don't get you guys confused. Okay, you see how tight this range here, how tight this is? In this case, you could take it for the breakout and put your stop loss at a new 1 minute low. Here it already did a decent move, right? I know it's 15 cents, but it looks like this stock doesn't move a lot. So yeah, in this case, I wouldn't use a new 1 minute low. In this case, I would use at least half of the range of the last wave. Second trade, you have taken it for an ABCD pattern. This trade, I wouldn't have taken it immediately here to the long side. Anyone? One reason? Why don't we like this entry here? You will figure it out. I know that. What? First wave. Okay, that's good. One good reason. At the moving average, kind of should make a W shape. That's good as well. I like that. Come on. There is another reason. It's not had time to develop an ABCD pattern. Good. All those answers are correct, guys. I like them. I want you to just mention one more reason. All those answers are really good. Close to the previous day close reward. Kind of wicks. Kind of. Okay, a hint. Hint. I'm circling a hint for you guys. What did happen right here and what happened right here? Okay, failed breakout. That's close enough. Engulfing, really good. Head and shoulders, another good reason. 3-bar play. Not really, will not go on 3-bar play against. But look at this, a breakout happened and the stock dropped down. What do we want to see after a breakout? Either a move or a retest. That's it exactly. Perfect. So you see, after a breakout, this is an ascending triangle. After a breakout, you want to see either a move or you want to see it going up, retesting, and continuing going higher. So what's our stop loss after a breakout? This is the range which we have. Our stop loss after the breakout is half of the range. Why is it half of the range? Because if it gets back down into the range, it's not as strong as we expected it to be, and there is no reason to hold into it. So one of the main reasons why I wouldn't take this thing to the long side here is because after the breakout, it went down into the range. It went down into the range of the breakout. That would have been the main reason for me not to take it. However, seeing that it's actually holding and making a double shape after that would give me a little bit of confirmation to take it to the long side. Maybe not here, somewhere around here or somewhere at the breakout, just to make sure that it's coming back down and that this was actually a trap for the bears. In fact, I would have been kind of interested in shorting this thing right here because, as some of you guys mentioned, it started making a head and shoulders pattern, right? With a clear neckline down there. So this would have been slightly interesting to take it to the short side. But there would have been one reason for me not to take it to the short side. What's the reason not to take this thing to the short side? Look at both time frames. What's the reason not to take this thing to the short side? Exactly, GG. As long as the stock is holding above the 9 moving average on the 5-minute chart, it's still good to take it to the long side. It's still a decent trend. So despite having a setup right here starting to form, I wouldn't take it to the short side unless it breaks the 9 moving average or at least closes below the 9 and starts forming something below it. So yeah, this definitely wouldn't have been a short for me. Your entry was on a new 5-minute high. That's good. It's definitely decent. So this entry is good. An entry at the breakout would have been way safer right there. So third trade held above the VWAP, curling into the price plus stop loss at the low of the pullback. That's smart. I love your stop loss. Eventually got your 2R target. I love this. So you're getting to the long side, you are exiting right there, taking it, losing 1R, re-entering, getting 2Rs, and you are in the green. So yeah guys, ascending triangle, breakout, partial at the breakout, getting into half of the range, you are out. You are not interested in trading this thing to the long side until it just holds or starts breaking out. You take it to the long side here, it's forming a new range, it's breaking above the range. Good place to add. This would have been a good place to add, moving your stop loss into half of the range because it formed a new range right there. Now it's going in your favor, partial and closer to the high of the day, just in case it makes a double top right there. Still no reason to exit. This is a huge move and I would expect a pullback before a continuation. And then that is the consolidation right there. Not sure what it did right there, but I would have personally added anywhere right there. Definitely partial at the daily level. So good job, Ivan. 3R net. That's amazing. You managed this one well. X the unknown traded Apple, and you traded Apple on the 1-minute chart, 15-minute chart. Let's take a look at that. This is also 1 minute. This is the SPY. Okay, this is the SPY. You have the SPY next to you as a reference, right? That's smart. Now look at this. What setup do we have right here? You are having an ABCD pattern on the 1-minute chart along with a 5-minute open range breakout with the stock close to view up with a move smaller than the average true range. This is one of the A+ open range breakouts. I think the daily though was weak. I'm not really sure. But still, that's not a bad long right there. That's definitely a good long. Taking partial at the moving average, I would have done the same thing 100%. We're having a strong resistance ahead of us. Take a partial on it. New one with low, taking another partial just as a precaution. Let's say that this is 20%. Now you see a double top on the 1-minute chart below a strong moving average. You don't want to just give the racer break even and end up with, I don't know, if it's 20% partial on 2 Rs, it will be somewhere around 0.4 R. which is not really worth it, right? Getting only 0.4 R out of trade. So yeah, lock in a bigger partial right there, then it's breaking out. You are taking another partial, and now look at this. This is what we talk about. We're forming an ascending triangle or a new range. It's breaking out, getting into half of the range. Big partial for me will be right there once it's getting halfway into the range, right? I see you actually exited all out there, which is why you didn't hold on to break even. So yeah, good job there. Danish, how do you stick to your trading rules or discipline? I find it really difficult. Danish, this comes over time. You need to keep reminding yourself of your rules every day, and you need to see how much you're losing every day because you broke your rules. So write this list on a spreadsheet on Word. Net R, okay, this is what you got, okay. Then if sticked to the rules, to the, oh my god, my handwriting is horrible. I'm a doctor, guys, so excuse me. I know that my handwriting is horrible. If stick to the rules, okay, have it next to this one. You'll see, for example, your net R's for today is 2. If stick to the rules, for example, 5. Next day, maybe your net R 3. If stick to the rules, 1. Because sometimes when we're breaking our rules, we'll end up green, right? You'll end up green if you break your rules. But do this for 1 month. Let's say 4, 5, -3, +2, 6, for example, 8. And after 1 month, check how much you made the way you are trading and how much would you have made if you stick to the rules. And I bet you'll see that eventually if you stick to your rules, you will end up the month more green. Yes, maybe there were some days where you broke your rules and you ended up more green, but on the long run, or after a month, you will see that if you stick to the rules, you would have actually made even more. Exactly, Anne. You know, thank you, Peter. Maybe people here are enjoying it. I have people on YouTube who are thanking you for that. Adrian traded CCL. So CCL gap down and it has been weak since a few days. You saw a descending triangle forming on the 1, 2 and the 5-minute chart. Went short after 3 or 4 touches, but then quickly got subbed out. My stop was 1371 above the small range. Now let's take a look at this one, okay? One thing which I don't like about this descending triangle, guys, anyone? What don't we like about this descending triangle? Look at all the time frames. That's really important. Okay, let's see right there. What don't we like about this descending triangle? What's there? What can we see there? It is a descending triangle, but for some reason, every time it's getting bought back up. This is something which would have made me concerned. If you don't look at the 16 chart, other than that, it was really good. I like it on the 1-minute chart. The 5-minute chart is choppy a little bit. This candle here is horrible, definitely. So look at this. This should have been the descending triangle for me until here. Yes, maybe it's not as clear as you drew it. This way you could draw a descending triangle still, but I would have liked it all the way till here. And if I would have taken this thing to the short side for a descending triangle, I would have taken it here. Because this is so clear. It's making lower, 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 lower based on the waves. Lower, high, lower, high, lower, high. Here, it started making higher highs. here it started showing you strength, and actually here would have been a good place to start looking at it to the long side. If you shorted here and you get stopped out anywhere there, I would tell you it's fine, it was a good setup, but it just didn't work out. This here showing you a blast. It was forming a descending triangle, but it broke up. This is a pattern failure. You could actually trade it either to the long side here, or if you are really patient and you want to play it a little bit more safer, similar to what we said on wedges, you wait for a breakout, you wait for a retest, and then you wait for a continuation to take it to the long side. So yeah, I wouldn't have taken it to the short side here. This was a pattern failure here, and this is a place to start looking at it to the long side. But would I take it to the long side? Personally, no, because there is a huge or a lot of resistance ahead of me. I'm definitely not taking it to the long side. I would wait for it to maybe go a little bit back up and then come back closer to the low of the day, and then I'll give it another shot to the short side. Definitely not playing to the long side. Another good actually note right there NWIG brought us is the moving average cross. Moving average cross is a signal or an indicator of a reversal, right? A lot of algos are programmed to trade moving average crosses. Do you know how they are trading moving average crosses? This is the way they trade. And I'm going to just explain it right now for you guys, just to know why or how they are trading it. Okay, so look at this. How do algos trade those moving average crosses? Once the moving average cross, they take their position for the opposite direction. As long as it's going and going and going, despite it making new highs, new lows, whatever it makes, they do just nothing on it until moving average crosses one more time, which is their exit and a switch of position to the other direction. They do that and then go to the other direction. And let me show you just a quick example how this works on stocks which are trending, like NIO today, before we just continue here. Look at this. This is the way they'll be trading. You see this moving average cross here? That will be the entry to the long side, let's say. Moving average is crossed here. That is their position to the long side. They're holding here, not selling, nothing. I mean, maybe as or whatever they're working, but they'll be doing nothing. Right here, still not bailing on it. What will be their exit signal? That's it. Their exit signal. Moving average cross there. That's their switch of the position to the opposite direction. So they'll be long here, all the way up here. You see? From here to the long side, all the way up here. Yes, they will give all this profit back, which is around, I don't know, 70 cents or 60 cents, right? But this will be their profit right there. Now that moving average is crossed, that will be the short position. What's their exit? They're not partialing right here until moving averages cross one more time, and that will be their signal to take it to the opposite direction. Now, what time frame you're doing it? You could do it on any time frame. I mean, by the way, this could work well on stocks which are trending, but you could get chopped a lot on other stocks. For example, look at this. Moving average crossed. That's the entry to the short side. All right? It's going down. Look at this. All this move will be a break even for them, for those algos. Right? So you shorted it here, you are covering here. Small profit, but all this move is nothing. Now that moving average cross one more time, that will be an entry to the long side right here. Let me get my epic pen one more time because it freezed. And oh my god, my whole PC freezed. Okay, now look at this, guys. Moving average cross one more time. Let me scroll it forward. It's freezing, freezing, freezing. That's so bad. Look at this. Moving average is crossing one. This is the cross right here. That will be the entry to the long position, and look at this. Hold on it. You see those pullbacks, those moves, just do nothing, do nothing, do nothing, do nothing, do nothing, until here, exit. Do you see that? You'll give this profit back, right? And that is the profit right there. This is the way they are trading. So once you see a moving average cross, I'm not saying that it's don't go against crosses. You see a lot of time that they are just simply failing. But you know that this right here will be an entry for some algos to the long side. And you can't just go for a pattern which already failed. First of all, the pattern failed. And the second thing, the cross happened right there. Yeah, exactly. Didier. It's algos and maybe other traders who are trading moving average crosses right there. Right here, you could get yourself chopped like hell if you trade moving average crosses. You take it to the short here, you get stopped out here, you take it to the long here, you get stopped out here, you take it to the short here, you get stopped out here. So yeah, this is where you will just be paying commissions one after another, and also huge moves right there. Okay, perfect. So Sebastian, let's see what you traded there. You're welcome. So Sebastian traded net, and what did you do on net right there? First of all, you traded 5-minute opening range breakout or view up bounce with an entry on the pullback to view up. How do you like this kind of anti-cyclic entry? So let's see what you did right there. To be honest, this is not bad if it was with the trend. I personally wouldn't have taken it against the trend. Why is that? The daily chart is strong, I see, but it gapped down today, and it's still far from the 9 and the 5. It could literally go all the way down and bounce, or it could go all the way up and make new highs, or maybe fill the gap and go down. A lot of scenarios you could think about on the daily chart. So this will tell us literally nothing, in my opinion. The 5-minute chart, kind of choppy, right? Moving average is below, moving average is above. It's just telling us nothing. Overall, it's weak at the open. It's squeezing all the way up. Dropping down, you're taking it to the long side. I like that you are taking it to the long side as close as possible to the support. That's definitely a good thing, but not in this case. Not in this case, because you don't have... If you did this on NIO today, let's say it's squeezing up, it's at all-time high, it's making a sharp drop to view up, or maybe to some technical level or to a support level, and then you are taking it to the long side and it does the same thing, like literally the same play. I would say it was definitely fine. Okay, but in this case I don't have a clear direction to this thing, and you see it was just a little bit choppy right here, sort of a descending triangle breaking down, and then it just started to come back up right there. Now around here maybe it would have been interesting for a long one more time, because this is half of the range. After the breakout, half of the range coming back up, this would have been interesting for me to take it to the long side. Even your entry right here wasn't bad to the long side, because you're having a double bottom, or you see right here, it held it in the pre-market, held it here, you're taking it to the long side, and really amazing run. I love that. Second entry though, you see you did okay. This is not bad in my opinion as well. This is a parabolic reversal. This right here, if you draw this line, this is a parabolic reversal, and this is 1, 2, 3 candles right there, right? Unfortunately, what I don't like about this move is that it started above the 9 and it ended below the 9. I want to see the move starting or trending below the 9. For example, here, this is what I want to see on a parabolic reversal. Stock dropping down, pulling back from the 9 and the 5, for example, dropping down 3 consecutive candles, and then I would take it for a parabolic reversal. A stock which starts all the way above view up and then goes all the way below view up, I will not take a parabolic reversal on. Okay, let's say this is the 9 and the 5. It started up there, it ended up down here. This I'm not going to take, unless it just goes way more than that. Let's say it opens here, this is the 9 and the 5, the stock opens here, and then it starts dropping down. This I would take for a parabolic reversal. The last one was amazing. I love it. You're having a clear support right here. You see a double bottom after the market open, a new 5-minute high. You're having the moving average cross right there, taking it to the long side. Double bottom here, and along with the double bottom, you're having a higher low, which is confirming your direction. This was totally perfect. I love this one. Thank you, Sebastian. So Mo traded AMD, and this is good. In the pre-market, it was flat. When the stock is flat in the pre-market, what does this tell us? This tells us that there is no trend. The moving averages will also be flat. And you could see that moving averages right there are literally flat. If it goes up, it could be an interesting open range breakout. If it goes down, it could be an interesting open range breakdown, right? It opens up weak, goes below all the moving averages. You take it to the short side for 1 minute open range breakdown, taking it to the short side, partialing all the way down. I wouldn't have done this. I don't add on the way down, always add after the pullbacks. Those ads are amazing, I love them. partialing all the way down. Another pullback you could have added here one more time. Why is that? This is a 3-bar play. On 3-bar play, this is not considered the third consecutive candle. This is the first candle, and best entries are on first candles. So you could add to your position here, partial all the way down. No need to add here, right? Another pullback to the 9 moving average in the 5-minute chart. You see that it's holding. You're having an M shape right there. Another add to the short side. You see how you could add a lot, but you added as close as possible to the 9, which is still good because your average is up there or maybe up there. This is still an amazing add. And then you held on nicely to the last partials. So yeah, really good job right there. That's amazing. A lot of partials at the beginning, but you are partialing way better earlier. Is the reason because at the beginning you're flat maybe and you don't want to have a loser, and later since you're already green or maybe at your goal you just don't care what's going to happen? Because that's what I was, yeah, exactly. So this is something to work on as well, right? You don't need to trade differently based on your P&L. Your trading should always be based on your rules, and you need to execute it as good as you can, right? No need to just trade differently based on your P&L. Because look at this, looking at this, I see that you're good. If you just follow your rules, you know what to do, right? This right here, you know what to do. You know when to partial, you know when to hold and when to exit. But right here, the trading style is different. If I take a look at this in one screenshot, and then I take a look at this on another screenshot, I would think that those are two different people trading. I wouldn't guess that it's the same person trading. Nev right here. 10-15. Yeah, because the stock is downtrending. It's dropping down, and when the stock is dropping down, lower high, lower high, lower high, lower high, lower high, lower high, lower high. You can't expect it to just continue making lower highs, lower highs, lower highs, lower highs. At one point or another, it needs to make a pullback, and by a pullback, I mean a new 5-minute high. That will be totally normal. You can't really hope that it will just make a V reversal, squeeze you up and squeeze everything up. After a huge drop like this, if I see a new high, the first thing which comes into my mind is that this new high is a pullback. It's not a reversal. It could be a pullback, but most probably it is. It could be a reversal, but most probably it is a pullback. So definitely I'm not taking it to the long side for a V reversal right there. I would wait for it to go to the 9 and the 5, see how it behaves right there, and then continue. If it goes to the 9 and the 5, bounce a little bit, not making a new low. Here it did a new low, not making a new low, then comes back up, and then it makes a new high right here. Now I see that it tried to make a reverse ABCD pattern. People shorted it here for that reverse ABCD pattern, and then here they get sold out, and this is the place where you could start getting interested in it to the long side. Where would I get sold out if I added it right here? If it is an add right here, I would put my stop loss around my average. If it's a separate entry, I wouldn't take an entry right here. I would take an entry somewhere down here. Because what it could do is this and then get me stopped out. It's just so tight. But the moment I make sure that this is a strong resistance right here and I take it to the short side, my stop loss will be somewhere around here. The double top at VWAP breaks the ABCD. No, this doesn't break the ABCD. Not yet. Why? If this is the C right here, it didn't get broken. It's just consolidation. Yeah, it doesn't. Exactly. So let's take a look at what NIO did. So, oh my god, I hate this one. I hate it when this happens. When it gets me out to the penny and then goes. By the way, this doesn't mean it will go. Right now, I just think that it might make a reverse ABCD pattern and continue dropping down. It's just sad when it gets me to the penny. And look at this, it's the previous resistance right there, acting as a support. I'm not really sure what's going to happen right there, but it's fine. Let me show you how I traded this thing today. And I'm going to explain why I was short buys on it at the beginning, right? A lot of people, they were long buys on it at the beginning, at the open, but I wasn't. At the beginning, I was a little bit short buys on it. Why is that? Yesterday, we had a strong day. We had a really strong move yesterday. That's it, a really strong move yesterday. And after a strong move like that, I honestly expect some profit taking or maybe some pullback, right? Just me as a trader, I don't think that, or maybe investor or swing trader, right? I will not just take to the long side at a new high, like at the highs. We know this saying, right? Buy the dip, right? Buy the dip or buy low and sell high. Just the easiest rule right there and the most difficult to execute, right? Because sometimes you end up buying the dip and ending up even lower, right? Now, anyway, buy the dip, right? You right here at 27, where it opens at 27, it's not by the dip, it's by the highs. You are buying the high of the day, right? So basically what I wanted to see some pullback. I want to see the stock drop down. I didn't expect to just go all the way down there. At least, I don't know, at least a little bit to the bottom side. And right here at the open, it drops down, it gives an engulfing. I knew that this might actually be a fake right here. And I told myself I would take it to the long side only if it breaks this area. Just as confirmation. It would have been sold off, 50 cents, which is not bad. Came back up, squeezed, made a new high, and I would take it to the long side. What I noticed is after that, my pen, what are you doing? I noticed that after that, it's making a setup here. What setup is that? It's not fully there, but it's there. The bullish engulfing sandwich. What am I doing with it after that? I'm taking it to the short side and starting to partial all the way down. And that partial, unfortunately, it was good, but I got short biased a little bit because of that. And I took it one more time to the short side here. I noticed that it did a lower high, and I thought that if it makes a new low right here, it could make at least 50% move from which I could profit. And the moment it makes a higher low, I would take it to the long side and start coming back up. Then I noticed that we had a couple of cents fake breakout. Look at this. This was a fake breakout here. This right here, it was a fake breakout by a couple of cents. And I didn't like to see a fake breakout without stock continuing to go higher. I knew that it still could do that because this move here, it was huge. It didn't take enough time to consolidate. It didn't take enough time to pull back. So yeah, it definitely could have made this. But still, I told myself I will try it for a short side because it needs to make at least 30% pullback or 50% pullback before continuation, right? From a move from which I could take some profits. Now, that didn't work. It got me stopped out, and now I see an ABCD pattern with a W shape, double hammers on the 5-minute chart, a new high on the daily chart, taking the position to the long side. And remember what I said, if I go against the direction of the trend, if I go against the daily chart, it is a scalp for me, and you could see it's a scalp because of the over partials. But when I go and take it with the trend to the long side, I'm so biased and I'm so patient with it. I will just hold on till it gets to my targets. My target is 28 round number, the break of 28, 28.50. Now, could anyone tell me why I took a big partial here? So look, that was around 15% partial, 20% partial, and I don't remember, I think 20% partial, and I was left with 50%. 50% is still a huge position, right? Especially after this move. 50% left was still good. This drop right here, I exited 25% of my remaining, so I was left with only 1/4 of my position. What's the reason I exited most of my position here? Exactly, Charlie. I have 1, 2, 3 consecutive 5-minute candles, a doji at the high of the day, a new 1-minute low. This is a parabolic reversal. This is where Andrew actually traded to the short side, and we know that parabolic reversals, they could go all the way down to the 9-moving average in the 5-minute chart. The 9 on the 5 is around $1 down, and I don't want to give $1 back, right, if it just decides to flush down. So I just decided to be safe and exit. Now, whatever I partialed, the 25% which I took here, 25%, I added them here. I doubled my position and I was left with my 50% again. Partials all the way up. Now look at this. I pull back to the 9 and the 5. I pull back to the 9 and the 5. That's why I added here. I added 2850, which is the round number. Add the pullback to the 9 and the 5. And then I took a partial. Another add right here on a W shape. And unfortunately, it got me out. Now, right here, I was left with 15% of my position. And this was a little bit of a loser. That was my average here after the last add. But I decided to give it a little bit room down there. Why is that? I wanted to see if the previous resistance will retest, act as a support, and then continue going higher. So yeah, that I gave a little bit of profits back, but I'm okay just to be safe and not regret it. And this is what we just said right here. It got me out to the penny, but we expected that it might make a reverse ABCD pattern and then drop down. Did you put your stop loss below that consolidation on the 1 minute chart on that ad? No, those ads were just so light. Look at this. The stock was clearly going straight up. This pullback on the 1 minute chart, it's not a pullback. I don't consider this a pullback. It didn't make a new 5 minute low yet. For me, a pullback is the moment it makes a new 5 minute low. And right here, this pullback, look at this. This is the move. This is the 100% move. The pullback, as you remember guys, on an ABCD patterns webinar is 50 to 70%, right? 30 minimum. This right here is not even 20% pullback. So I can't just add right here and put my stop loss down there. I want a pullback which is at least 50%. That's it. This is a decent pullback in my opinion. It's 40%, but it's a decent pullback. This is the 50% where I just decided to give it the maximum, right? If it pulls back here and I added here, it's fine in my opinion, and move my stop loss down there. But having that as your stop loss after this huge of a move is just not enough to continue or to give it power to make another leg up. So yeah, my average after those ads wasn't here. My average was still somewhere down there. After this ad, it became a little bit higher. Now let's take a look at this one. This trade is for Kaiser. Kaiser traded VRTX. The entry here was based on the time and sales. Despite the time and sales, I like VRTX to the short side. You could see that in the pre-market, it held below VWAP, right? And it held below the moving averages. At the open, it squeezed to VWAP, made the reverse ABCD pattern, came back above VWAP, right? To the penny fake breakout, dropped down, and now we're having lower highs. From here to here, lower highs. He saw a signal on the time and sales, which got him to the short side. Without the time and sales, for me, the best entry would have been somewhere down here, just as a confirmation to see that M shape forming and the new low. I would have added at the break and moved my stop loss to middle of the range. Kaiser started partialing all the way down. This ad is something I would never do. This ad right here is something I would never do because I don't add when the stock is just dropping down. I love adding on pullbacks just to be safe. He saw something more on the time and sales, which gave him a confirmation for his position or for his direction. Partial, consolidation ad, some partials. Now this is the way which I like it, right? Ads on the pullbacks. This is amazing. Multiple ads, no partials at all, and partial at the daily level. Consolidation, no ads, nothing. Another ad. This is something which I also love to see, love to do. And then full exit right there. And this right here, look at this move, guys. It looks so small, but look at this move. $230 to $213. This is a $17 move. 5 shares, it's almost $100. So yeah, this is an amazing run right there. And it's actually 2 hours trade. That's really great patience right there. So yeah, do you guys have any questions? Yeah, this ad, in my opinion, was definitely decent. These ads were good, and this ad was amazing. But by the way, Kaiser is not trading similar to my style or our styles. He's trading a lot of the time and sales and the level 2, right? Level 2 and daily chart levels. So yeah, his style is different and it works a lot. We've seen his trades on a lot of trade reviews. they are a lot different than how we trade, and it works well. So I can't tell you that his ads are bad. I consider him even a better trader than I am, like a lot. Do you recommend any technical book for a beginner? By the way, there is a book. Let me check the name. It's a book by Alexander Elder. Alexander Elder. Anyone read a book by Alexander Elder? Come on. I think it's recommended. Is it recommended in BBT? I think it should be recommended in BBT because it's a great book. Yeah, Alexander Elder, but I don't know what the name of the book. I'll Google it right now. Give me a second. The New Trading for a Living. Oh, it's actually recommended in BBT. That's it. Make sure to read this one. It's not for swing trading, you ignore the swing trading thing, but just the book itself and the notes and the tips in it are amazing. Anyway, because the stock needs to make a pullback, it will not just go straight up, right? And we said how the candles are usually being traded, right? They don't do this open, close, open, close, open, close. They usually open, close, next candle opens, goes a little bit back down, and then it rips, right? If it's really strong. And I was waiting for this. That's it. That's why I was short biased in it. I didn't really think that it will first go all the way up and then it will go down and then it will go up. That's just too much. So I expected it first will make that wick, then it will get back up, it will make a new high and rip higher. And this was it. It first dropped down, then it came back up, made a new high on the daily chart, and then it ripped. This is the daily candle. Yeah, and so it's definitely a good one. I also liked it. I actually read it recently. I'm surprised I didn't read it before. So yeah, have a good day, everyone. That's it for today. If you have any questions, feel free to email me at ayman@bearbulltraders.com. I will be in the chat room. Trade safe, everyone. Yeah, and talk to you later. Question on profitable trading strategy. Why trading stocks $1,800 to get a dollar move when you can have more on cheaper share? Okay. $1 move on these type of stocks is 1% of your account, which is enough to make from on this stock. And by the way, not all the time. You could see that $80 to $100 stock could make $2 or $3 move, right? It depends just on the share size you're taking. And remember that you're also having a margin, right? If your risk is, let's say, I don't know, $100 per trade, and you use the margin, you could make 4% on $1 move of your account, right? But remember, the bigger the move, the bigger the loss. If you're trading cheaper stocks as well, let's say low float stocks which move $5, $6, $10, remember that you could lose the same on those stocks. It's safer to trade those high cap stocks because they are predictable and it's not that easy to get slippage on them. You are less likely to blow up your account unless you just remove your stop loss and hold on for your losers. Alright guys, so bye bye.